Hi, I'm Peter. I've been involved in financial markets right about like 25 years. So even if I consider myself young, this is quite a bit of a time. I've been trading, I've been analyzing, I've been writing about markets, and now I'm involved in wealth management. This means that I actually have to be quite aware of the trends which are dominant in the world in order to make good investments. And just to scare you a little bit, I have to tell you something. ESG is on its way out. You might not believe it, but that's the way it is. Because if you start thinking about the whole concept, the S and the G part, then it's a little bit problematic, because especially in the United States, shareholders have become rather wary of those letters, because they are feeling that people are trying to change the world with their capital. And more is talk about the fact that the purpose for a company is not to change the world, but to deliver value to shareholders and satisfy customers, as it used to be. Yes, I might say that in Europe that is still not the case. And the momentum for ESG is still strong. There are plenty of people doing conferences. There are plenty of people specializing, I don't know, even doing PhDs. But if you really start thinking, then the future for sustainable finance and sustainable investments, it is not so bright. It is not so bright because more and more there are talk about market distortions. If you have regulations that actually ruin market signals, and you won't have capital allocation to the most productive place, you have mispricing of risk. Because if there is once again regulation, and if capital flows are directed somewhere due to regulation, then this might and probably will generate the situation where once again capital is allocated to somewhere where it wouldn't be allocated if things would be allowed to move a little bit more freely. Then there's of course this wonderful, in quotation marks of course, challenge of greenwashing. So if the regulation and the overall sentiment and the PR and the media and the overall information flow emphasizes sustainability and ESG, then companies are motivated to perhaps show them a little bit better than they actually are. Now, is this a good thing? Well, probably not. Then there's the question of shortage of capital for high-risk ventures, because you might have something which is maybe not that fitting into ESG framework, but might be useful in broader sense. And you just don't get capital, because ESG standards might create a playing field which is not level at all. And this distorts the availability of capital to projects which would be highly beneficial for society. But if they do not fit into the framework of sounding and feeling nice, they just won't get the capital. And then you have the trouble of the uncertainty of long-term payoffs. Yes, it all sounds very good. All the words and everything behind ESG sounds extremely good. But you have something which is, in case of investment, rather problematic. You have very big uncertainty of longer term payoffs. you don't really know, are the things that you are going to do or are going to be forced to do due to regulation, are they actually going to have this effect that they hope to have? And then you have this incredible problem of moral hazard again, which has proved to be an issue, I think, in several cases for the last 40 years. Meaning that if something is heavily supported by the government, it might be at one point bailed out by the government. So this means that people who are heavily, or companies who are tilted heavily towards ESG and sustainability, they might understand and feel that and take rather excessive risks because, hey, they are doing the right thing. So what I'm telling you today is that ESG is on its way out. Yes, it is going to be a footnote in the future. Yes, there are going to be standards, but it's not going to be this overwhelming new way of life when company has not just shareholders and clients, but stakeholders and maybe has a responsibility to whole society. Yes, company has responsibility to whole society, but not in the ideological framework of ESG. And I'm telling you, believe it or not, that only E is going to be the important part. And I'm going to go even further. And this is not something which would be, how should I put it, scandalous. Because this has been told by the head of the biggest asset manager in the world, BlackRock, already last summer, that the abbreviation ESG is a dirty word because it has been politicized, and all the troubles that I told you, all the problems that the framework has, have been already emphasized. So, of course, there is a future for sustainable investments. Of course, all the companies should very, very firmly try to make their businesses sustainable. Of course. But this should be done due to the signals coming from the market. Innovation, which is good, always comes bottom up, not top down. So, sorry to tell you, there's going to be sustainable investments. There are going to be, it has a future, but the future is much different than you thought. Thank you.